Smart 24, driving business.
A very good evening, ladies and gentlemen, and a warm welcome to the show. Thank you so much for tuning into Smart 24 TV, where we drive your business. My name is Anthony Sebali, and this is Financial Markets. Today is Eid. Happy Eid to all the Muslim brothers and sisters there. I hope you had wonderful celebrations. As for us here, we keep driving the business, and welcome back from the very long day and the long celebrations. And now we are here to break into the financial markets and what is currently trending. Today, in a special way, we are going to be discussing the financials for the USE listing. Uganda Securities Exchange has over 19 companies that are listed, of which 10 of these are domestically listed and 9 are not, or they are cross-listed. But in the last few weeks, there have been a series of release of financial statements from prominent institutions and companies that are listed on the Uganda Securities Exchange, amongst which we had the two rival telecoms, Airtel Uganda and MTN. We had a couple of banking institutions, including DFCU Bank, Stanbic Bank Uganda. We had other institutions as well, such as British American Tobacco and the like. And some of these are so huge, and probably investors and viewers don't have enough time to get to a comprehension of what is happening or the facts behind these figures. Now, joining me on set tonight is none other than Mr. Kayemba Isaac, a financial analyst from the Uganda Securities Exchange, and we're going to be kind of elucidating you on what is currently happening at the Uganda Securities Exchange and also the developments from the financials. Mr. Kayemba, you're most welcome to the show.
And thank you for having me. It's a pleasure. It's always a pleasure. And Eid Mubarak to all the Muslims that are celebrating. It's always a pleasure joining you on your show.
I don't know if someone has invited you or you have plans later on in the night. But how was your Eid generally?
It has been good. It has been good. Trying to get some rest before we can resume for the week, because it's also not yet done. So yeah, it has been a good one. Yes,
absolutely. Now, looking at the last few days and weeks, a couple of financial statements have been released from some of the listed companies. But just before we get into the financials, how important is it for our viewers and the investors, especially the younger investors and the new investors, to know more about their companies, or the people that are investing in these companies, to know what is happening as per the financials? How important is that?
So I would say it's extremely important as an investor when a company releases its financial statements, for one, to look at what's going on in there. So financial statements as a whole are an indicator of what's going on with those companies. What are their performance results? What do you think might happen in the next couple of years? What has happened retrospectively? So they are an indicator of where a company is going. So it's extremely important for an investor to look at them.
Well, looking at also the financial statements, sometimes it's too bulky, and sometimes companies release annual reports, and there's so much to read. And you know, Ugandans, we don't have much time to read. But if I'm looking out for a financial statement as a basic interpreter of you know, maybe financials, what should I be looking out for? What are some of the key factors that I should be looking out for from the company's financials?
Well, as you have said, sometimes they can be bulky, but is always in the detail. So you want to look at that detail and understand what really is going on, because one single figure could change your entire perspective. So much as it is a lot, it can be a lot. It's very good, and some of the best investors really take their time to look through those financials. But in a nutshell, the quickest way or where you can start when you try to look at financials is go through the three statements first, and that is the income statement, the balance sheet, and the cash flow statement. So the income statement gives you an indication of the company's performance, how much revenue it was able to make, what their expenses look like, what the tax they paid looks like, the nature of the depreciation of their assets, and if in case they have any borrowings, how much have they paid in finance costs, or how much have they made from finance related income. And lastly, it gives you an indicator of the profitability of that company, how much that company has made in profits. So it is essential to look at that one first. Then you can be able to look at the balance sheet. So the balance sheet shows you the financial position of the company, or the overall financial health of that company. So the quickest lines you can look at is the total assets. What is the size of this company's assets? What is the size of their liabilities? So then you can gauge the two and see in terms of solvency or liquidity, is this company in a healthy position? And then lastly, there is the cash flow statement. And cash flow statement is a sort of a reconciliation, but it shows you how much in cash this company has been able to generate for the previous year, but also how much in cash do they have at the moment. Because cash is very important, especially if you're to run your day-to-day business activities. Yeah.
Well, let's delve right into it now, Mr. Kayamba. When you look at the listings, I think most of them have been able to issue financial statements, except for a few, like I think Quality Chemicals, which is their year ends in March, and so we are still waiting for a couple of days. Probably they'll be issuing theirs. But starting off with the telecoms, because they are more enticing right now, given that there's some bit of competition, so to say, amongst them. Let's look at Airtel Uganda first. First of all, we haven't met since the IPO closed, I think, on the show. So you give us, first of all, your perspective on the performance of Airtel since listing on the main market. But looking at Airtel's performance here, you see that the financials presented indicated that there was an increase in revenue of 11.1%. To a tune of 1.7 trillion. However, the profit after tax decreased by 8.8% from 325.7 billion recorded in 2022 to 296.9 billion for 2023 on account of increased costs. Now, does this worry shareholders? What are some of the perspectives? Because how revenue increases and profits decrease is sometimes a conundrum, but maybe you can help us understand exactly what is happening here.
Now, firstly, before I go any further, I should issue a disclaimer, and this, whatever we're about to discuss, is not in any way a solicitation for someone to invest in any security or form of security.
Absolutely.
And it's best for an investor to make their own research before they can invest in any security or stock they're in. So you can go ahead. So sometimes costs, especially when you're looking at income statements, it's important to look at the recurring nature of those costs. Some could be a one-off, or they could be recurring. So it can be something that has just arrived or is happening once this year and won't be able to happen for the next year. So it's better to look at that detail. So I'm not so certain whether it's really what happened with the counter, but we see that is what happened, a reduction in their net profitability. And yes, that is as a result of an increase in costs. But yes, I think that is it's important to look at expenses and whether any of them that are in there are recurring and would have an effect for the next year. So yeah.
And what is counter here is that there's a 7.4 earnings per share that we witnessed from 11.35 earnings per share. I don't know if that also rings any bells. When you talk about earnings per share, what exactly should come to the mind of the investor? Because remember, we do have dividends, interim dividends, and then the whole dividend. But when you talk about an earning per share, what is the perspective in which the investor should view that?
Maybe to slightly correct you there, it wasn't 11.35 earlier on, but that is actually the PE ratio. It's a price to earnings ratio.
Yes.
But what earnings per share show you is how much of net profit have we been able. It's like an indicator of per share, how much in net profit has the company been able to generate. So the higher the figure, and that means the higher or the better the company is performing. So 7.34 at 7.4, you would say relatively the company is performing well, despite that slight drop in profitability. Then the price to earnings ratio is really a valuation indicator. So the lower it is, the better. So you want a PE ratio to be lower, but that could also mean that the company is trading at a very low price if it is very low.
But the earnings are great.
Yes. So the higher the earnings, the better. The higher the earnings per share, and the lower the PE ratio, the better too for the.
They also want a smaller price as well.
If you're going to buy and you want to, you want to get that upside in price. So the price depends on who is really the stakeholders, because the current shareholders and the managers of the company are really pushing to see that they produce enough or they make enough money for their investors to be confident enough to trade the stock at a relatively high price.
Wow.
Yes.
Amazing. Then looking at the recorded earnings before interest, tax, depreciation and amortization, that was at 33.17%. This is also one of the few things that mainly is talked about when we talk about financials. How important or significant is this 33.17%? So
an EBITDA margin, or sometimes it's an operating margin, and the higher it is, the better. So it really shows you how much you're retaining in terms of your revenue, the revenue you're making. How much do you retain vis-a-vis the costs that the company is incurring? And this is before the non-cash expenses, that is depreciation and amortization, but also the interest paid and the tax. Though interest and tax are very important because you can't hide away from the tax man. So usually investors also focus on what the EBIT is. And also the interest is really important because if a company is paying a lot of money in debt, there's also a need for you to check whether their interest coverage is enough for them to be able to pay interest on their loans on an annual basis and have no such things as solvency risks. So at 3.17, it's relatively good, though it could be higher. And I think the management will make sure they get a higher return, a higher EBITDA margin for their investors. So yeah, that is in a nutshell. That's what the EBITDA margin shows you.
Then the data revenue here grew also by 11.81%, and voice calls also increased by 6.7%. I think this is an edge they had over MTN. They also declared a final dividend of 2.15 Ugandan shillings per share.
Yeah, so that is the dividend they declared, and that was
that's the very first one.
No, that's a final dividend.
The final dividend.
Yeah, okay. So they have been paying dividends even before listing. They paid one just after listing. Yeah. So this was the final dividend. Their data revenue grew by 11.81%. Yeah. But that's not necessarily, we shouldn't say it's higher in relative to MTN, but that is precisely what their data revenue grew by, and their voice calls also increased by 6.7%. So it's an indicator that, even with this environment we're operating in, the company is still growing, and there is hope. So there is still growth at the company that can aspire to. So usually double-digit growths in terms of revenue are a very good indicator for growth for a company, and they really show you what to look forward to as an investor.
Absolutely. Talking about the share price, Airtel's share price upon listing was about 100 shillings. Currently, I think it's about 80 something.
Yes.
This is a drop about 16% since listing. And then when I recall in the IPO, during Airtel IPO, we had two sessions.
Yes.
The first session where the price was still stuck at 100, at least for applicants. But then the price was subsidized for both retail and institutional investors later. Now with this drop in price, are there any implications on the investors who invested before the very first time, or there's still a promising performance from Airtel?
So yes, there's a slight drop with regards to the investors that joined during the IPO, and but it's a relatively small one because their shares were incentivized, and they were able to get it at a discounted price. As an investor, sometimes you get worried what are other investors thinking about. So when you yourself have your own valuation, there's also that factor of what the neighbor, your next investor, is thinking about. So some of this could be driven by retail clients trying to move on their money and that kind of thing, but it is not really doom and gloom. Those things happen in the market, but what is important is you as an investor to look at the company you're trying to invest in and make sure you feel like this is where my money should be, and am I getting back a return? Because at the end of the day, the company is still making money. Company is really has a good market share in the country. So it's up to you to gauge and see, am I buying at the right price? What is my strategy? Am I looking at a longer term perspective? And then one can decide that, it's good for me to stay at the moment, or it's I can move on to another asset. So really there are quite a number of dynamics that affect share prices, but that is one of them.
Well, just to look at the Airtel's case, during the IPO, after the second offer that came in the IPO, we saw NSSF coming to grab over 50% of what was listed, or what was meant to be listed as shares, at over about 199 billion. And this showed that NSSF was the biggest investor, was going to be the biggest investor, just like the case was for Cipla, just like the case was for a couple of other stocks that got listed. And the narrative is, I've had this argument from some investors and analysts that the dominance of institutional investors in a market is to the detriment of liquidity. Because like you said, retail investors always have sentiments. They find it easier to sell off, buy more, and so on and so forth, unlike institutional investors like NSSF. So in this case, for example, for Airtel, where we're having over 10% of the company now under NSSF, are there any worries that there will be lower liquidity in as far as daily trading is concerned for the stock?
You could say that the fact that they usually have buy and hold strategies or long-term strategy is also a detriment to liquidity. In a way, you could start that argument, but on the other hand, retirement benefits schemes and also those pension schemes usually have the largest size of liquidity in any economy or in any market. So you find that they are the biggest investors. So at the end of the day, they'll get to invest. So you can't bar them from investing. And they bring you that opportunity of having that liquidity that can be invested and put away for a long term. Much as the trading is needed, the liquidity is needed, the investment is also necessary, and it is needed. And it's not necessarily true to say that they invest and stop investing. They do come back to the market, yes, as buyers, and some of the retirement benefit schemes.
Did you say big of these institutional investors? Do they actually happen?
They do happen, and I must say they are they are the biggest traders on our exchange, on the country's exchange. So, yeah, you could say they have buy and hold strategies, and they will hold for a very long time, given the fact that pensions have a long duration till they can be paid out. But also, on the other hand, they do trade, so they are also contributors of liquidity. So we can't fault them from one end and not praise them for another. But yeah, retail investors do trade, and they come in and go, but you can't look at how they trade, the volumes they trade, and say that they contribute in their own way, and also the retirement benefit schemes also contribute in that very good way. Yeah.
Absolutely.
Yeah.
Thank you, Mr. Isaac. We're going to take a very quick break.
Yes.
But when we return, we're going to look at MTN Uganda, sort of a similar story with Airtel. And MTN Uganda's financials showed an increase of about 15.1% in total revenue to a tune of 2.6 trillion. That, in contrast to Airtel, is a much greater increase from 11 on Airtel and to 15% on MTN. And then when you look at their profit after tax, it also increased by 21.4%. Things are looking really good at advertising here. We're going to come back and have a look at the details. My name is Anthony. We are discussing the financials for the listings at the Uganda Securities Exchange. I'm with Mr. Isaac Kayemba. Please don't touch your dial. We'll be right back after this quick break. Very warm welcome back, ladies and gentlemen, to the program. Thank you so much for keeping it Smart 24 TV. We will drive your business. We're located at plot 42 Nile Avenue, Kampala, from where we hail to actually present business and its perspectives. My name is Anthony. This is Financial Markets, a show on which we focus on investment in the capital markets, and especially those of our land, that is in East Africa and abroad as well. And we get to bring you experts to share opinions on what is happening in the market, and also give you advice on how you can make the best decisions out of your savings and investments. So today I'm with Mr. Isaac Kayemba, financial analyst at the Uganda Securities Exchange, and we are discussing some of the highlights from the financials. Of course, we are not going into details, and this is a disclaimer. We are not entirely stamping things here, but we're just giving you perspectives on what is happening and giving you a deeper interpretation of what you saw in the financials for the 2023 financial year, at least for some of the stocks that are listed on the Uganda Securities Exchange. We've so far looked at Airtel Uganda, and we've exhausted entirely some of the highlights from the performance of this particular stock. Now, let's shift our focus to MTN. Isaac, when you look at the financials for MTN, to be honest, they seem so good. It's a no-brainer that the company has also registered over 19.5 million new subscribers, which is one of the highest, at least, that we've seen in a single year. But also, they have a lot of very good figures here. Looking at the revenue increasing by 15.1% in just a single year to a tune of 2.6 trillion, and their tax and their profit after tax increasing by 21.4% from 406 billion to 493 billion for the year 2023. What do you make of this performance in general?
So good performance. Obviously, you attribute that to the management and the decisions they're making. So the management makes the decisions, and the investors at the end of the day benefit from what they are doing. And also, if the economic environment is relatively stable, then it gives you the opportunity to make as much as you can. So that's why we're able to see some of those results. If in anyone's perspective, they're able to see that this is actually a good performance, then kudos to the management of the company. Also important to note is with regards to Airtel, it's Airtel Uganda Limited that is listed rather than and not Airtel Mobile Commerce Limited. So that business line is separated from Airtel. Other than but it's still in there with MTN. So, but yeah, that doesn't take away the fact that they had significant increase in their profitability, and as you can see, the EBITDA margin for MTN is significantly better at 51.4% and Airtel at 33.1%.
They retain at least 50% of their earnings after the costs have been incorporated.
Yes. 51.4%. Yes. And that's really one of the hallmarks that you look at and say that, oh, good, the company is really performing well. But also important to note with Airtel, you have to dig deeper and know whether these are recurring costs that will reappear in the next year or not. So that is an important thing to look at. And what happens this year might not necessarily happen the next year. Or it's also good to look at the past and understand how did this company perform in the past, how did we get here. Yeah, so yes. But overall the results are quite good for MTN, so I should say the investors should be happy with what the management is doing for them.
Yeah.
Yes.
Well, talking about their price, at 170 shillings currently, do you think the price has also been a factor to the performance? Because when you look at, yes, Airtel has a much lower price, but then even the liquidity is much lower. But MTN with the higher price has a higher liquidity. I don't know where the contrast comes, but is it that because MTN has spent a little bit longer on the exchange, retail investors are used to it? Is it because of this performance? What do you think is driving the price, first of all, the price maintenance at that level, but also the appetite of investors investing in a company like MTN?
Now, how a company trades technically is a factor of both price and volume. And where does volume come from? Volume is the number of shares they have. Relatively, Airtel has should be not really, but if you look at the investors, how they are spread out in regards to both institutions and retail investors, you find that MTN was able to onboard more retail, but also more institutional clients. And after a while, those companies absorb that pressure that comes with having listed initially. So you have new investors coming on board, and from both sides, institutional, but also retail. So when that activity starts coming on board, and you see the patterns start to change. So in the price or how the dynamics for the counter trading is a factor of those two. The price, but also the volume. How dispersed are the investors on the counter. You find that Airtel had very few institutional investors, but also quite a number of retail investors. MTN was also able to onboard quite a number of retail investors, plus also quite a number of institutional investors. So that really affects the dynamics. And then these two were IPOs. The platforms that were used during those IPOs enabled people to transact in easier ways.
Yeah.
So you find that is giving investors power, power on how to invest, when to invest. So you see the dynamics within the market start to change too. Yeah.
Well, and looking at the dividend as well, final dividend of 6.4 shillings, I think that has been growing with time.
Yes.
Because I've seen MTN's quarterly results, quarters have been issuing a dividend, and it has been growing, and now it's standing at 6.4. I remember the very first one was about 4.7.
4.7 to
4.7, yes. And now at 6.4 shillings per share. Do you think also this is good return for investors?
Yes, so with that dividend that keeps on growing, you find that investors are attracted to that, especially dividend investors, those who focus on getting that cash flow from dividends. So this is of course a great job by the management. So, and it attracts the investors to invest. And I think with time the activity will also increase and improve, and you will see that start to be absorbed by the investors.
Yeah.
Yes.
Well, let's move on to Stanbic Bank Uganda, and that's one of the other very outstanding performers here on the exchange. Stanbic Bank Uganda currently is priced at 34 shillings. When I look at their year-to-date performance, it has improved by 6.25, but then their year-on-year performance has increased by over 61.9%. Because around this time last year, it was trading about 23, 21, 22, 23, and I think investors who bought at that time should be on their toes right now, because the price now has grown, so has the revenue and the profitability of the company. Stanbic now stands at a record 15.1% increase in revenue from last year's 1.19 trillion, and then their profit after tax has also increased by 15.1 trillion from 357 billion to at least 411 billion. What is your perspective on this?
So yeah, I think it's really the same story with MTN. The company has invested, the management has invested in performing well, and those are the results that the investors can receive. But also they were able to pay very good dividends the previous year. And I think that has pushed, that's one of the reasons that has pushed the counter to go that far. Previously, some of the investors had sentiments that the counter was a bit underpriced, undervalued. So we have seen quite significant activity on the counter, and as such, the price has steadily increased. As you can see, a net profit of 411 billion is really significant. So those are some of the things that the investors look at and say, you know what, I should join or I should invest in this company. So results are really what move the markets, and if a company is performing really well, you will see its price going in the same direction. So that is also kudos to the management for that kind of improvement, and I think it shall keep reflecting in the share price as people now want to invest in that counter. So I think you can say more money goes where money is. So when you make money, you expect people to join your club. So yeah, I think that's it for Stanbic.
Do you think recently they changed the CEO from Anjuko, Madam Anjuko? Do you think that will in any way affect their performance? Because I think she has been doing a very tremendous job. As in her role during CEO, you can see the figures speaking for themselves in terms of the net profits, in terms of also the subsidiaries, how the subsidiaries have been performing during her tenure, but now she's going to an even bigger position. Do you think this in any way is going to affect the performance of the bank?
So usually companies like this have plans and structures in place that ensure that kind of continuity is kept in place. So you would say that same team that was able to perform well, a different team can also do the same in the same environment. So besides speculating, we do believe that the performance shall continue if the same tricks were used to get there. So yeah, and we hope that the company has the same continuity and also is able to improve, and that too shall be able to reflect in their share price. Yes.
Moving on to DFCU Bank, still remaining with the financials here for the banking institutions. DFCU, unlike Stanbic, recorded, yes, likewise, an increase in revenue by 4.09%, but that was from increase in total to about a tune of 449 billion. However, their profit after tax decreased by 2.56% from 29 billion to 28 billion, a slight decrease. And there's also a 95% cost to income ratio and about 38.39 earnings per share. Are there any comments for DFCU Bank in contrast with the other institutions?
So for DFCU Bank, yes, there has been a bit of turbulence. A couple of things have been coming up with regards to impairment of some of their assets, things like that have been affecting their profitability. But yeah, still is you can see that increase in revenue. So we hope that can also be sustained, and you see an improvement in performance, and that too also comes back to the investor. See, even with that performance, they're able to pay out a dividend, which has also grown by 11.11% from the 8.19 declared previously, and now to 9.1. So still under that environment, they're able to pay that dividend. So when there is turbulence, you expect that at a point they'll be able to improve and also get to a point of good performance and be able to push that back to the investors.
Well, amazing. The question I also have, before we leave the financial institutions, there's been a regulation amendment by the Minister of Finance, at least comments from last year, that the minimum capital requirements for all banking institutions are to be raised from 25 billion to 150 billion. And we saw some banks responding, some closed, some were unable to actually meet the requirement before even the enforcement of the regulation. And some institutions like Bank of Baroda were wise enough, they did a bonus issue to kind of raise some bit of more capital. But do you think this in any way is going to affect the banking or financial institution space in our economy? Because according to the ministry, they are doing this in order to make sure that these banks can be able to absorb shocks, like we saw COVID-19 when it ravaged. Many banks were closing, and it wasn't a very good picture. So do you think this was a good move in your own perspective?
Yes, so I think the people at Bank of Uganda are able to ascertain that the risks that are coming or that we have previously had, we should be able to maintain certain level of capital so that we can absorb those shocks, as you have said. So yeah, if the company is able to sustain that capital level, and you expect that they have enough muscle within them to withstand any form of turbulence. So yes, I think I do believe it was a good move. I think they will always keep going higher because it's a significant indicator of how our financial service sector and the health of companies should be. Yes.
When this happened, Bank of Baroda issued a bonus share, which what I didn't understand is how the price dropped from 85 to 16.
Yes.
That's about 6 times lower. So what really happened with the bonus issue? I thought it was meant to raise more money. Like these were bonus shares provided for so that people could actually raise more capital for the company.
Yes.
But how come that had a negative influence on the market's price?
So it wasn't really a negative influence. I must say that. But the new shares are derived from retained earnings. And really it's not that you're raising money from people or you're getting it off investors, but a dividend is a form of a bonus issue is a form of payout to the investors. So
you're actually giving out free shares?
No, they're not necessarily free because they come from the retained earnings.
The company actually uses part of its earnings?
Yes, it's retained earnings to create that new capital for themselves. So what happens in terms of the share price is usually it's corrected by that new issuance because now the number of shares has increased, and you find that the price also takes that same direction. So the trades that happen, what investors do feel at that moment. So maybe it's them that decide, you know what, I think now this should actually be at a lower price, given the fact that even the number,
a higher supply.
Yes,
so
now a higher supply, so
lower price.
Yeah, the pricing does follow when you have that higher supply.
Absolutely. That's a question I think many of our viewers have been asking, and I'm glad you actually answered that. Let's move on to British American Tobacco Uganda. Things don't look so good here. For BAT, we are looking at a decrease in revenue by 8.28% in total revenue to about 44.8 billion. Their profit also after tax decreased by 9.84 from at least 9.8 billion to about 8.9 billion. But so has their liquidity also been stagnant, with their price stuck at 15,000 and no liquidity. What's your opinion on BAT?
So with BAT, yes, that performance is that way. I think the nature of the business they are in and the regulation that comes with it, both from a tax perspective but also from a health perspective, find that the willingness for Ugandans to consume some of their products could be reducing, and also the tax that they have to pay on some of those commodities that they sell is also an effect on their business. But also they have been trying to reduce their business. However, on the other hand, much as you might say the share price hasn't been moving, they have been paying dividends consistently. They pay more than 100% of their earnings in dividends. So the investors that have been there for quite a while have been benefiting from that dividend that they are getting. So you can look at it that way, but it's not always doom and gloom. So one has to look deeper into why such certain things are happening. Yes,
and I agree with you. There's been a lot of regulation on them. They don't advertise, but then also the industry is marked by a lot of other operators who are, working under
yes, illicit and
they really work to the detriment of the company. But then let's look at Umeme. Umeme also has a very successful story, I have to say. Looking at their financials, they recorded a 16.37% increase, which I think is the highest so far amongst the listings you have looked at a tune of 2.1 trillion. However, their profit after tax also reduced by 92% from 148 billion, if I'm not mistaken, to about 11.4 billion. There's a lot of stories concerning Umeme. Their concession with government, I think, has expired already, and we don't know what next. But so far, so good. For the stock, the price is very good. It has actually been going up, and investors seem to be still interested in the stock.
Yes.
What's your opinion about this performance?
So first of all, what you see at net profit. So it's good to look at those financials and understand what's really going on. So with Umeme, those are accounting accounting conventions. So what is important to look at is their operating profit, because that did increase. But the fact that their concession asset is coming to an end in a short period of time, the depreciation of that asset, the amortization of that asset has to be accelerated. So you find that it decreases the profitability. But also key to note is they were able to pay off all their long-term debt. So that does increase cash available for shareholders, for equity holders. And I think those are some of the sentiments that push investors to demand for the stock, and then you see an increase in its share price.
Yeah, well, they declared a dividend of 54.2 shillings, a total dividend of 63.9. I think this 54 is after the tax.
No, so the 54 is the final dividend. They had paid 24 previously in February. So their total payout for 2023 then comes to about 78.2. So that is how much the dividend has been improving from 63.9 to the 78. So yeah, and those are some of the things that do push investors to keep investing.
What is the fate of Umeme? Because some people are eyeing a delisting, others are eyeing that probably is going to be sold off to some other company.
So that is to the discretion of their shareholders. So the management and their shareholders, they will sit, they will make their decision on what they want their future to be. You might see them investing elsewhere or doing, so that is to their discretion, and for us wait to see what comes out of that. Yes.
All right. Now besides the earnings here, let's look at the overall performance of USE for the first quarter of 2024. Turnover has increased by 39.45%. I think around this time you should be making good money because investors are up and down, you know, when financials are being released. From at least now 17.2 billion that was recorded in Q1 in 2023. Then the main movers on the index have been NSE cross-listed stocks, with catalyst being the 21.89% gain on the Ugandan shillings by the Kenyan shillings, and also yes, a couple of other facts here. But give us the brief overview for Q1 in as far as performance of all the stocks is concerned.
So yes, turnover is increasing, but most of that is as a result of Umeme. We've seen institutional demand on Umeme, but also on the other hand, the indices, the all-share index has been rising. We've been seeing quite significant activity on those cross-listed securities on the Kenya side, though some of them they rarely trade here in Uganda, but we have seen quite significant change on our neighboring stock exchange. But also the currency has been improving, so that also leads to that change on the all-share index. Also the activity has been improving in terms of volumes traded and how the activity generally of investors has been improving. Yes.
No, that's amazing. That's amazing. Hopefully we'll have a good second quarter as well, and probably the third and the fourth quarter as well as we close there. Thank you so much, Mr. Isaac. Our time is running out, but really, there's so much we could discuss,
Yes.
and I hope definitely you'll be able to come back in case we need you here.
Hopefully. Yes.
Thank you so much.
Thank you for having me.
You're welcome.
Yes.
There you have it, ladies and gentlemen. That was it from us tonight. Remember, we've been live on YouTube at Smart24 TV Live. You can also catch the conversations on X at Smart24 TV now. You can tag us there, and we'll definitely be able to get feedback from you, and we'll get to answer some of the questions you probably have. We've discussed quite a lot of things, and Mr. Isaac probably here has a lot to do on this Eid after here. To celebrate with the family and also with you at home. Thank you so much for tuning in. Happy Eid once again to all the Muslim brothers and sisters. We wish you a very good night. Bye for now.